Most retail traders right now are bag holding their Bitcoin and their Mag 7 positions right now. Most professional traders right now plan to profit from your liquidation of those assets. This isn't a correction, this is a regime change. And today we are going to talk exactly how to front run this. Most tech stocks aren't correcting right now. They are structurally broken. The AI trade is insanely overcrowded. The expectations for these stocks is totally insane. What do you think happened to Palantir? It was trading at such a high multiple, had a great earnings report, but a slight miss, and the stock's down huge. Look at Salesforce. Your favorite tech names are going down right now. Look at Oracle. All these stocks are going down because they have a very high expectation baked in. These stocks are overly crowded. The problem is that like most retail traders are obsessed with these names anyways. They're going to hold these names through a huge drawdown and accept any loss, thinking sooner or later it's going to go up. Most professional traders right now are shorting your favorite stocks right now. A lot of people have actually made a lot of money by shorting Bitcoin. There's a file linked below in the description which tells you every single indicator professional traders look at, and these indicators have successfully predicted every single market crash since 1955 with a 100% accuracy. This is available to you for free, available in the description below. So obviously there are a lot of ways to look at it. The first way to look at it is that obviously tech is insanely overcrowded. This is a stock picker's market and you are going to find alpha by looking at single stock names. Now obviously the equities market presents a huge opportunity set for a lot of traders. The job of professional traders isn't exactly to like find that one name which is going to like blast off huge. Professional traders' job is to specifically construct convex payoff structures using options in order to like capture huge market moves and have great upside from these single stock names. I haven't seen anyone talk about this online. What you're going to hear online is people running the wheel strategy for passive income. People collecting small credit, and if the stock does gap up or gap down, what's going to happen is that they lose a ton of money. There is a huge risk of assignment of the option if it's in the money. You get assigned the stock and you're essentially just bag holding it. You're like, well, now that I'm assigned the stock, I'm just going to bag hold it and hold it for my pension. That is a loser's game. You do not want to play that game. You want convexity. You want to construct your portfolio and your positions in such a way where if the stock moves even a little bit, you make a lot of money. An example which I had mentioned in a previous video was long the VIX. You can easily construct a long vertical calendar on the VIX. You can easily construct a long vertical option spread on the VIX. You can have a 4-to-1 upside very easily if the VIX moves 10-20%. And look what the VIX has done in the last 2 weeks. You would have made a lot of money, as did I and a lot of professional traders, by being long vol when the price is low or like when the VIX is low. Most traders buy when the volatility is extremely high and sell when the volatility is extremely low, getting totally crushed by the implied volatility of the option, having no idea what they're doing and getting totally smashed. Professional traders do the opposite. Professional traders buy when the volatility is low and sell when the volatility is high. Not only profiting from the huge move, but also profiting from the volatility environment and making sure they don't get IV crushed or crushed by theta or gamma. These Greek letters are just fancy words which Wall Street uses to keep idiots in the unknown or to like not let them know what's actually going on. To give you a very simple analogy, delta of the option is just the a delta of the option is just the velocity with which its price changes, and gamma, that's its acceleration. Theta is just basically you have an option, a long option, it's going to lose value. It's going to lose its extrinsic value. That's theta. So simple, yet so complex. So professional traders care about stock picking and tickers, but more than that, professional traders care about constructing a convex payoff structure. If you want to know the exact indicators professional traders use to predict every single market crash, which has been done so since 1955 with 100% accuracy, click the link in the description.